How's it going, everyone? It's Sam. I am about to make a pretty big bet. And I want to be clear, this is the day that we're going to hear about the Fed rate hike decisions. This is being recorded a few days ahead. I'm going to be actually traveling in an airplane the day that we hear this about the Fed rate hike decision. But I want to give you my plan going forward because I think this might be right for other people to do the same. Now, of course, I'm not a financial advisor. Everyone's financial situation is different, all that kind of stuff. But there are a couple things I see in the market that I want to bring to your attention. And I wanted to tell you a little bit about what I'm going to do going forward. I have a full dedicated video coming later this week on how I'm investing now. But I want to give you a little bit of a heads up because I think time is sensitive right here. If you guys don't mind hitting the like button and subscribe button, I really do appreciate that. There's a link underneath the video to Unstoppable Domains where you can get a readable wallet address starting at $5 and there are no renewal fees ever. You can also buy these and then sell them, resell them, and make money on it. So check out that link underneath the video if you don't mind. So right now we've seen some crazy pricing in the market, right? Bitcoin has actually been relatively stable, right? Over the last year, we've seen it pretty much go sideways. Over the last 15 months, actually, it's been pretty much sideways. It's gone up to 69, then back to 30, then up back in the 60s. So it's been a wild ride, but really, compared to where we've been over the last couple months, we're looking pretty cheap. Now, of course, I don't know what's happening the day that you're watching this because this is pre-recorded, but the pricing has been looking pretty good over the last month or so. We've been in the 38s when we've been all the way up at 69. There's a lot of positive developments. At the same time, stocks are officially in a bear market, or the NASDAQ is at least. It hit 20% down today on Monday. So we are officially in a crash that's considered a crash. Many stocks are down much more than 20%. For example, Tesla, it was over $1,230, and now it's down at $766. So this is officially a 37% down day. Google was around 3,000 for about 6-7 months. Now it's down 15%. Palantir was up around 40, I believe, one of these days. Even if we take it from 30, it's down 63%. Amazon was up at 3,700. A lot of analysts expect about 4,200 this year. It's down 23%. Facebook down cut in half. Netflix, PayPal, Block, all down even more than that. These are some of the companies I'm buying. Some of them are just interesting companies, right? Like Netflix, PayPal, Block. A lot of other companies are down even more. They're down 90%, some of them. Now, this has been all happening because there's a lot of uncertainty, right? Companies that are high multiple, people don't want to invest in them in a raising rate environment. Some people expect 9 rate hikes this year. Some expect more. We have Fed uncertainty. We have uncertainty over Ukraine and Russia. We have uncertainty with recession fears and stagflation. This has caused a lot of the markets to be hurt. Now, what I see a lot of these being temporary issues, right? There's a lot priced in right now. So do I think 3 or 5 years from now, we're still going to be at these low prices? No, I think a lot of these stocks will return. A lot of the crypto will return to all-time highs. Now, I could always be wrong, but that's my bet, right? I think over the long term, we're going to recover. Just like the stock market in the past, it will go up. It will return. And like I said, I think a lot's being priced in right now. Do you remember Evergrande? That's something that I was just thinking about earlier today, right? Like all the crazy stuff that's happened over the last 2 years, we forget a lot of it. Even just 6 months ago, people were deathly afraid of Evergrande. Maybe it was more than that. Maybe it was less than that 6 months ago. But that has just gone away. No one really cares about it. No one talks about it. It's not a fear anymore. Sure, there are certain Chinese stocks that are still, being sold off because of delisting fears and stuff like that. But things come and go. Worries come and go. There's just news about an EU ban on proof of work. So people sold off Bitcoin, and then 5 hours later, 12 hours later, it came out that they did not ban it. So then it went right back up. So there's crazy stuff that happens all the time. And I think a lot of these things will go away. Some of the supply chain constraints will go away in a few years. A lot of these companies aren't really even affected by supply chains like some of these tech companies. However, we're in this fearful environment. And luckily, I built up some cash. And now I am sitting on some money in Anchor Protocol and a couple other platforms. I have a significant amount of stablecoin. And I built that up a handful of months ago. It pays a nice interest rate. It's nice to sit there just in case there is some kind of massive dip in the market. But I've been continuously dollar cost averaging into the stock market really heavily. I've also been dollar cost averaging into cryptocurrency as well, specifically Bitcoin. I'm going to continue to do that. That's not my massive bet. What I'm doing now that's different is I am getting a home equity line of credit. I thought about a refi, but with our situation when we're going to be moving into the next house, it probably makes more sense for a home equity line of credit. When we bought this house, we had an issue where I couldn't buy and get a mortgage. So we were able to buy the house in cash, significant amount of equity locked up in it. So I'm going to have the ability to take money out if I want to, in case we see some kind of really good opportunity in the market. Or it just gives me the ability to put even more of my cash in here, not hold kind of an emergency fund. So I got a significant amount of money. I'm going to get a significant amount of money locked up just in case of emergency to plow into the market. Also, I have a couple other things I'm doing. One, I can't really explain too much, but it should give me a significant amount of cash. It's another thing that I've been able to build up that, again, I can't talk about it yet. It's not done, but it would give me a significant amount of dry powder. Also, I do use M1 Finance. So I'll put a link to this underneath the video. I think if you sign up and then start depositing, we both get $50. But M1 Finance is a really nice, easy to use borrow platform. So I've been plowing money into this tech portfolio that I have, and I can borrow at 2% interest. I can borrow, it's about a $60,000 portfolio, so I can borrow $22,000 right now. So if I need some dry powder for something, I have some extra margin that I can dip into if need be. So between all these different things, all these different ways of accessing money, I have a pretty significant amount of money that I can draw from and put into the market if we see more depressed prices. And even if we start turning up, where we start upticking, where people fear less, let's say Ukraine and Russia reach an agreement, I've been plowing money in the market, so I'll still be happy. But I will probably continue to dollar cost average because some of these interest rates that I'm going to be able to get are just going to be too attractive not to use some of, because we've seen such depressed pricing on some of these stocks. And I think now is a decent time to take out debt, honestly, because we're going to see increased rate hikes. We're going to see increased interest rates in the future. And if we can do that when we're down 40, 50% on some stocks that you really like that will continue to grow, become more profitable over time, it's a calculated bet, but I think it might be worth taking. And I'm not saying to go out and get 20% credit card interest rates or even 10%, or stop paying back your student loans if they're at 7 or 8% and put in the market. I'm not saying any of that. We're all in different situations, but for me, this makes a lot of sense. I'm young, I have income, I can deal with a little extra risk if things get too attractive. And right now, things are looking really attractive. So I'm taking a bet that the market will return in a couple of years, and I'm getting ready to deploy even more cash if it is attractive enough when I have that accessible. Now, like I said, it's not right for everyone. The piece of money that I would get that's not from the HELOC actually doesn't have an interest rate. It would just be selling something. So that would be a significant amount of money as well that I could get to put towards this market. I'm pretty excited. I think we're actually going to be in a great spot in several years. And some of these prices that we're getting right now on assets, they're just unbelievable. So I'm not saying this because I'm bragging that I have money that I'll be able to throw at the market. I'm saying this because if you're in a situation where you can get a low interest rate and lock it in, and you're able to take advantage of some of these rates before we start moving up, and you're able to put money at the market, you might want to consider it. Now, I was just talking to someone about this, and they were saying something very similar, even though that it's not what you always think is probably the most prudent thing to do. When you compare a 2% interest rate versus a 10% average increase in the price in the S&P 500, gets interesting. So let me know your thoughts on this underneath the video. Do you think I'm stupid, right? To be 26 years old and have a house paid off and think about taking equity out of it and taking more of a high risk? Do you think that's stupid? Let me know in the comment section if you think that is by far the smartest thing I could do, because I'm too young to have so much money that's just tied up in equity in a house? Let me know that in the comments section as well. Thank you guys so much for watching. I do appreciate it. Let me know what you're doing in the market, and I will see you in the next video. Check out the link underneath the video to M1 Finance if you want to try that platform out. I really do like it. It's one of the 2 or 3 platforms I really use significantly. Then also check out the Unstoppable Domains link underneath the video as well. I'll see you in the next video. Bye.